All right, so get this. We're diving into this world where, like, real estate meets the blockchain, and global finance gets, like, totally flipped on its head.
Right, yeah.
It's all about decentralized finance, or DeFi, as the cool kids call it, and how it's colliding with real-world assets.
It's pretty wild, right?
Yeah, and to help us navigate this financial revolution, we've got insights from two giants in this space. Stani Kulechov, the brains behind Aave, a major DeFi lending platform, and Sergey Nazarov, the founder of Chainlink.
The Oracle network, yeah.
They've both been, like, instrumental in shaping this whole DeFi landscape.
Oh, absolutely.
So Aave, for instance, they were pioneers in this whole decentralized lending and borrowing thing.
Yeah, they basically cut out the middleman, the banks, and put the power back in the hands of individuals.
Okay, so less suits, more, I guess, code.
Exactly. It's all about empowering people.
But how does that actually work?
I mean, how can you lend and borrow crypto without a bank being all up in your business?
Yeah, like, is it just a handshake and a prayer? Okay, good.
Imagine this. You've got some crypto just sitting there in your digital wallet.
Probably next to my Bored Ape NFT.
Exactly.
Gathering dust.
Instead of letting it sit there, you can deposit it into Aave
Okay.
and earn interest on it, just like a regular savings account.
Oh, that's interesting.
But on the flip side, someone else who needs crypto can borrow from Aave using their own crypto as collateral.
So it's kind of like a crypto pawn shop, but like way more sophisticated.
More like a peer-to-peer lending platform,
Okay.
but powered by the blockchain.
Blockchain magic.
The entire process is transparent,
Go ahead.
automated, and governed by smart contracts on the blockchain.
So no more shady backroom deals.
Exactly.
I like it. This transparency thing is huge.
Yeah, you mentioned that earlier.
It's a big deal.
How is DeFi actually more transparent than traditional finance? Isn't crypto supposed to be like all hush-hush and anonymous?
That's what people think.
Yeah.
It's a common misconception.
While transactions on public blockchains are pseudonymous,
Meaning what?
you're not directly linked to your real-world identity.
Gotcha.
The code governing DeFi protocols is completely open source.
So anyone can see what's going on under the hood.
Exactly. Anyone can audit it.
Huh.
Every transaction is recorded on the blockchain, creating this immutable, publicly auditable ledger.
Like a permanent record that can't be messed with.
Precisely.
That's pretty wild.
This level of transparency, you just don't get that in traditional finance.
Yeah, they're usually more about secrecy and smoke and mirrors.
It's all very opaque.
So no more hiding risky bets or cooking the books like we saw with FTX.
Exactly. That's the point.
Man, that whole FTX thing was a mess.
DeFi's inherent transparency and decentralized nature, it's like a shield against that kind of thing.
So it's less about one bad apple spoiling the bunch.
Exactly. The FTX collapse, it was a harsh reminder of how fragile centralized systems can be.
It's like that old saying, sunlight is the best disinfectant.
It really is.
But transparency is just one piece of the puzzle, right? What about DAOs?
DAOs, yeah.
Decentralized autonomous organizations. How do they fit into all this?
They're basically communities that collectively govern these DeFi protocols.
Okay.
Instead of having like a CEO calling all the shots,
Mm-hmm.
DAOs let token holders vote on proposals.
So it's like a financial democracy?
It is. Every token holder gets a say.
That sounds kind of chaotic.
It can be.
It's also kind of brilliant.
There are definitely challenges with governing a financial system through like a decentralized consensus.
It can imagine.
But the potential benefits in terms of transparency, accountability, and community ownership are huge.
It's like a whole new way of thinking about how financial systems can be run.
It really is.
So we've got this revolutionary system built on transparency,
Right.
community governance, and of course the blockchain.
Yeah.
It all sounds very utopian,
Well,
but I'm guessing it wasn't all smooth sailing, was it?
you're right about that.
There had to be some bumps along the road.
Oh, absolutely.
What about DeFi summer? I keep hearing about this DeFi summer.
DeFi summer?
Was it like Coachella for crypto folks?
Haha, not quite.
Okay,
There were parties, I'm sure, and definitely a lot of hype.
as there always is with crypto.
But DeFi summer was fueled by something a bit more tangible. Sky-high yields.
So everyone jumped on the DeFi bandwagon chasing those juicy returns.
Basically.
Makes sense. Traditional finance was stuck in a low interest rate rut, and then along comes DeFi offering these crazy returns.
It was a frenzy. Ethereum, where most of DeFi lives, finally had stablecoins.
Crypto pegged to stable assets like the US dollar, right?
Exactly. This brought stability and predictability to the ecosystem.
Which fueled the yield-generating opportunities even more.
Everyone was scrambling to get in on this thing called yield farming.
Yield farming. Sounds like a lot of work.
It was all about moving your crypto between different DeFi protocols to like squeeze out the maximum returns.
Sounds like a financial gold rush, but instead of gold, it was yield. But all that glitters isn't gold, right? What happened when the music stopped?
Well, the party couldn't last forever.
Right.
The initial frenzy, it was driven by those high yields, but as those yields started to decline, things got a little shaky.
Okay.
The fundamental sources of yield, they dried up,
Yeah.
and that led to unsustainable strategies.
Like a financial sugar rush followed by a crash.
That's a good way to put it.
Ouch.
It was a period of like massive growth and experimentation, but it also showed that we needed more sustainable and diversified approaches to generating yield in DeFi.
Gotcha.
And this is where the concept of real-world assets, RWAs, comes in.
RWAs, the bridge between the physical and digital worlds. Instead of relying solely on these volatile crypto assets, we can now bring tangible real-world assets into the mix.
It's where the true potential of DeFi starts to shine.
This is where things get really interesting, huh?
We're talking about tokenizing everything from real estate and private credit to stocks and bonds.
Hold on, tokenizing real estate.
Yeah.
How does that even work?
Do I get a tiny digital house in my crypto wallet?
I mean, that would be cool.
It's not quite that literal.
Okay.
But essentially, yes.
Okay.
You can own a fraction of a real estate property represented by a digital token on the blockchain.
Whoa.
This token can be traded, used as collateral for loans, or even generate passive income through rental payments.
Like a digital landlord.
Exactly.
Yeah.
All within the DeFi ecosystem.
Mind blown. Okay, we need to dive deeper into this whole RWA thing.
We do.
But how about we pick this up in part 2?
Sounds good.
Catch you all then.
See ya.
Okay, so we are in the middle of geeking out about RWAs.
Real-world assets.
Getting the blockchain treatment.
It's pretty exciting stuff.
Yeah, we were just scratching the surface of how these digital twins of physical stuff could totally revolutionize, like, everything about finance.
It's a big deal, for sure.
So we've got this bridge between the real world and the digital world of DeFi. But what does that actually look like? What kind of changes can we expect to see?
Imagine a world where getting a loan doesn't involve weeks of paperwork and credit checks and, like, endless back and forth with the banks.
Yeah, that's definitely not my favorite part of the process.
Nobody likes that.
Okay.
Instead, you could use your tokenized assets, say a fractional ownership of your apartment building,
Okay.
as collateral, and bam, you get a loan almost instantly through a DeFi protocol.
Wait, so I could just offer up a piece of my digital building as collateral instead of going through all that bank hassle?
Exactly. It's all about cutting out the middleman, making things more efficient, transparent, and potentially way cheaper.
So it's like disrupting the entire mortgage industry.
That's one way to look at it.
Okay, but what about people who don't own property or like have a massive stock portfolio?
Right.
How does this RWA revolution benefit them?
That's a great question, and it gets to the heart of financial inclusion.
Okay.
Think about access to credit.
Hmm.
Right now, millions of people are locked out of traditional finance because they don't have a credit history.
Yeah. Or they live in places that banks don't really care about.
Exactly. They're stuck in this catch-22, can't get a loan without credit, but can't build credit without a loan.
It's a vicious cycle.
It is.
Yeah.
But with RWAs on the blockchain, individuals could use a wider range of assets as collateral.
Like what? What kind of assets are we talking about?
Anything, really, from their car to their small business inventory.
So it's about giving people the tools to build their own financial futures, regardless of their background.
Exactly. It's about democratizing finance, making it accessible to everyone.
I like the sound of that.
And it's not just about loans.
Right.
It's about opening up new investment opportunities.
Okay, like what?
Think about investments that were previously only accessible to, like, the ultra-wealthy,
Okay.
like private equity or venture capital.
Mm-hmm.
Tokenizing these assets allows anyone to invest, even with smaller amounts of capital.
So it's like leveling the playing field for investors.
Exactly. RWAs can help break down those barriers.
So we've got loans, investments. What else can we throw on this RWA blockchain bonfire?
How about global trade and supply chain finance?
Okay, I'm listening.
Businesses, especially small and medium enterprises, they could use tokenized invoices or inventory as collateral to access working capital.
So it's like making it easier for businesses to operate across borders.
Precisely. RWAs can streamline cross-border payments, reduce reliance on those old-school intermediaries, and empower businesses of all sizes to participate in the global economy.
Okay, this all sounds incredibly promising.
It is.
But I have to ask, what about the risks? Bringing trillions of dollars of real-world assets onto the blockchain, that just seems, I don't know, risky.
It's a valid concern, and it's important to acknowledge that DeFi has had its share of growing pains.
Yeah, like that whole Terra Luna meltdown.
Exactly.
That was not a good time.
The key takeaway is that every setback has been a learning opportunity.
So it's a constant process of evolution and improvement.
That's the beauty of open source development.
Okay, that makes sense. But what about regulation? Governments are still trying to wrap their heads around crypto, let alone this whole RWA thing. Could that slow things down?
Regulatory clarity is definitely essential for mass adoption.
So it's not a deal breaker, but it's something we need to figure out.
Exactly. Open dialogue and collaboration between the industry and regulators is key.
Okay.
We need to address concerns, show that DeFi and RWAs can operate within a compliant framework, and ultimately work together to unlock the potential of this technology while mitigating the risks.
So assuming we can navigate the regulatory maze, what can people do to prepare for this future where RWAs are a major part of the financial landscape?
The most important thing is to educate yourself.
Okay, so do your homework, understand the risks and the opportunities.
Exactly. This is still a relatively new and evolving space, so stay informed, be prepared for the bumps along the way.
It's like we're witnessing the birth of a new financial system in real time.
It really is.
It's exciting, it's a little scary, but it's definitely not boring.
It's a fascinating time to be alive, especially if you're interested in the intersection of technology and finance.
Okay, so we've talked about the benefits, the challenges, but how do we actually tokenize these real-world assets? And how do we make sure everything is secure and transparent?
Tokenizing real-world assets, it's a complex process, but it essentially involves creating a digital representation of the asset on a blockchain.
So it's like taking something tangible, like a piece of real estate, and turning it into a digital token that can be easily traded on a blockchain.
Exactly. And to ensure security and transparency, we need a few key things in place.
Okay.
First, robust legal frameworks that clearly define ownership rights and responsibilities for these tokenized assets.
So we don't want to end up in some kind of blockchain court battle over digital deeds.
Exactly. We also need reliable data feeds and oracles to provide accurate information about the underlying assets.
This is where Chainlink comes in, right?
Chainlink is a decentralized oracle network.
Right.
It connects smart contracts to real-world data and systems.
So it's like a bridge between the physical and digital worlds, making sure the information flowing between them is accurate.
Precisely. And this is essential for building trust and confidence in the RWA ecosystem.
It sounds like Chainlink plays a pretty crucial role here.
They do.
Okay, so let's talk more about Chainlink and the whole tokenizing real-world assets thing. Okay, so we're back, and we're ready to zoom in on these two heavy hitters in the RWA space.
Aave and Chainlink.
We've talked about the potential, the risks, even the nitty-gritty technical stuff.
The nuts and bolts.
But now let's get down to business and focus on these two major players.
Sounds good.
So Aave, they're already making waves in the RWA world.
They are.
They've got their own stablecoin, GHO, remember?
GHO, yes, a DeFi native stablecoin specifically designed for lending and borrowing.
Right, GHO.
It's all about providing more predictable interest rates, which is super important when we're talking about real-world assets like real estate or private credit.
Yeah, because those things tend to have, like, longer investment horizons, right?
Exactly. They need more stable financing terms compared to those crazy crypto markets.
Makes sense.
GHO aims to provide that stability and predictability.
So if I took out a loan to buy, like, a piece of tokenized real estate, GHO would help me avoid those wild interest rate swings.
Exactly. It's all about managing risk for both borrowers and lenders.
Okay, that's pretty neat.
It's a game changer.
All right, so GHO, check. Now, Chainlink, you know we've been talking a lot about oracles.
Those trusty data feeds.
But how is Chainlink specifically involved in this whole RWA thing?
Think about it this way. When we're tokenizing a real-world asset, like a building, we need to connect the blockchain to those off-chain data sources.
Right, to get information about, like, the building's value, ownership, all that stuff.
Exactly. The blockchain itself doesn't just magically know anything about the real world.
They need some kind of connection.
And that's where Chainlink's decentralized oracle networks step in.
So they're like a bridge between the physical and the digital.
Exactly, making sure the data feeding into those DeFi protocols is accurate and tamper-proof.
So no one can, like, mess with the numbers to get a bigger loan or something.
Exactly. It's all about trust and transparency.
And those things are super important when we're talking about potentially trillions of dollars worth of stuff on the
It's a
blockchain.
big deal.
Okay, Chainlink, I'm starting to get it.
Good.
But can you give me a real-world example of how these oracles are being used for RWAs?
Sure.
Hit me with it.
Proof of reserves.
Okay.
It's a way for DeFi protocols to prove they actually hold the assets backing their tokens.
Right, yeah.
Chainlink oracles can be used to independently verify those reserves.
So it's like an automatic audit.
Basically, yeah.
And that makes sure they're not just like printing tokens out of thin air.
Exactly.
That's pretty clever.
Another example is on-chain NAV calculations,
NAV.
net asset value.
Okay, remind me what that is again.
It's basically the value of an asset minus its liabilities.
Gotcha.
Chainlink oracles can provide real-time data feeds for this.
To make sure the value of these tokenized assets is accurate on the blockchain.
Exactly. This is super important for things like trading and lending, where having the right price is crucial.
It's all about making sure the information on the blockchain is accurate and reliable.
And up to date.
Yeah, which in turn builds trust and confidence in the whole system.
Precisely.
It's wild to see how all these complex technologies are working together to create a financial system that's like way better.
More efficient, more transparent, more accessible.
Exactly.
It's a new chapter in financial history.
And the best part is, we're just getting started.
The possibilities are endless.
Well, that's about all the time we have for this deep dive, but man, the conversation is far from over.
This is just the beginning.
To our listeners, keep learning, keep exploring, and keep pushing the boundaries.
The future of finance is being written right now.
And we're all a part of it.
We are.
Until next time, stay curious.